Welcome to another episode of This Week in Crypto. My name is Singh, and this is the episode for April 1st, 2018. Thanks for being patient. You're hearing this episode one day later than usual because of Easter weekend. In episode 13, we're going to talk about the fight against crypto ad bans, Japan exchange regulations, Coinbase adds support for Ethereum ERC20 crypto tokens, Ripple donates $29 million to public schools, and much, much more in this week's episode of This Week in Crypto. Alright guys, we have a lot to talk about this week. So let's get started. And the first thing on the docket, well, it's this fight against crypto ad ban. If you guys have been following the news, this week Twitter and LinkedIn have joined the bandwagon. Sorry guys, I couldn't help myself. I said bandwagon. But anyways, as I was saying, they've joined Google, Facebook, Instagram, Yandex, and Snapchat in banning cryptocurrency advertisements on their platforms. Well, there has been some further development in this space, and it seems that cryptocurrency groups are fighting back against this ban. Before I say anything else, I want to say that I'm ecstatic, extremely glad that crypto or crypto groups are fighting back. It says a plethora of things, but the one statement that really rings out is that crypto isn't going to take this laying down. And this is great. This says a lot, that they will fight for their technology. Now, you're probably wondering who's doing the suing. Well, a number of crypto and blockchain companies and associations from countries including South Korea, Russia, and China have decided to file a class action lawsuit against the internet advertising companies. And not only that, but social platforms as well, that have decided to jump on the bandwagon. Yeah, if you haven't already noticed, I'm committing to this pun. From what I could gather, the marketing perspective is that even if a legitimate product is being launched, and by being blacklisted from advertising, they basically have an uphill battle to fight to get their product in front of their potential customers and supporters. For that matter, the lawsuit is looking to challenge the restrictions put in place by the companies from the angle that these companies are actually colluding to create a collaborative monopoly on advertising. And I can see that. As far as winning goes, I personally believe that there's a slim to zero chance at all, considering that they're filing this suit in a U.S. court. Though in the long run, this will probably be a good thing in setting precedents. And by that I mean on the whole idea of creating a monopoly like these groups have been or have done. Now, we should keep in mind that these platforms are private companies with private policies. And because of that, I don't really think that the suit will be successful. Though, I want to turn my focus on acknowledging that Bitcoin isn't affected by these actions. The reason for that is that Bitcoin has never advertised per se. Mostly, it's been ICOs and projects that have been advertising on these platforms. So as far as Bitcoin being affected, or Bitcoin getting affected to a point where its market dominance decreases or people stop investing in Bitcoin, I'm not really too concerned about that. And again, that goes to say that because Bitcoin has never really actively invested in advertising, they've just been there. Whereas, like we said, ICOs and projects, they're the ones that have been advertising heavily. You have like Icon or the Binance coin or Verge or, A-Chain. These are the guys that have been doing the advertising because they're the ones that bring in some type of an influx of income. But that's also the same area or the same realm where a lot of spammy coins are coming out and defrauding or misleading some of the not so savvy investors. Well, you know what? I take that back. I'm not going to say not so savvy. I'm going to say first-time investors or investors that get caught up in the hype. And that's what it really is there's a lot of investors that get caught up in the hype and they don't do their due diligence. They don't read the white paper. And I don't blame them. White papers can be boring. They can be completely dry and full of technical information that a lot of people may not want to read or may not understand. For that very reason, we are collaborating to create a how-to guide in Crypto Coin Guru for members as well as non-members on how to invest or how to do research on ICOs. And for the non-members, we're going to have a very brief overview. Here's the checklist. Check it out. For members, we're going to dive into the nitty-gritty on what we should be doing, on how we should be looking at these white papers, how we should be evaluating if the coin is worth our time, worth our money, worth our investment. There's also something else that we do at CCG, and that's we kind of break down white papers for a lot of things. And we did one for ARC, and we haven't done one in a while. And the reason why that is because we've been trying to figure out how to do a white paper breakdown without having to, a lot of people that do white paper breakdowns, it almost seems like they're saying that this is a good investment. And we don't want to do that. All we want to do is we're trying to figure out how to get that white paper presented to you with just the facts so that you as investors can look at it and say, hey, this may be a good investment, or this may not be a good investment, or this is a shit coin versus this is a credible coin that may go somewhere. And what we really don't want happening is we don't want people saying, oh, well, CCG or Crypto Coin Guru talked about XYZ coin, and I'm going to use A-Chain just because it's the first coin that came to my mind. We don't want people to say, oh, they did a review on A-Chain. Actually, it's not even a review. They did a white paper simplification on CCG. So, you know what? They're probably endorsing A-Chain. We should go get it. That is the last thing we want people to think about when we do a review or a white paper breakdown. All we are doing white paper breakdowns in the member section for is so that you get all the details, all the facts, all the things that may be so mundane to read and so technical in their jargon that you get a chance to look at it in layman terms or in everyday English, for lack of better terms. And then you can make your judgment if this is something you want to put your money into. By no means are any of our white paper breakdowns endorsements of a certain token, coin, utility, or security for that matter. What it is it's just this is what it is, guys. This is what they're claiming they want to do. Now, it's up to you to see if this is something you want to put your money into or if this is just a fraudulent type of a venture that's posing as something good. We don't make that decision. That's where you have to do your due diligence. I know I'm kind of deviating from the actual news article, but this is very critical, and this is something that I really want to get across to you guys. And that's probably why we haven't done one in a long time, is because we don't want people to think that these are endorsements. And I guess now that I've said this on the podcast, it's up to you guys. Now it's up to you. We don't want to be held responsible because, disclaimer alert, we're not giving advice. We're not giving financial advice. We are just showing you methods and ways that you can go about in collaborating or acquiring the education needed to make proper decisions in investing in this exact sphere. Now, we did one on ARC a while back. And by a while back, I want to say 3 months ago, if I'm correct. It could be it could be longer back in time. But even 3 months seems like decades in the crypto sphere, in the cryptoverse. So we're looking at new tokens that we would like to break down the white paper on, but I just want to say this, and I'm sure I speak for the rest of the CCG crew, the rest of the CCG family, that this isn't us saying, hey, this coin is the coin to get. It's just us saying, guys, we're going to break this coin down for you. Why? Because there has been a lot of hype, or there has been a lot of people talking about this coin. And since it is in the top 50, you know what? We're going to break it down. And this is just where your research should start. I'm going to stop talking about how this should be taken as far as our white paper breakdowns are concerned for coins and tokens. And I'm going to lead this over to, if you guys really want to go over this, or you really want this education, this knowledge on the white papers of these coins, go to cryptocoinguru.net, sign up as members, become a member, it's really not much to become a member. Like a monthly of $15, $20, $30. Honestly, I don't think $15 a month is a lot, considering there are people out there charging $150 to $250 and even more per month. What we want to do is we want to get you that information so that you can start making decisions. And I believe we're going to go ahead and do this soon. As I look at my notes, we're going to show you a breakdown of how to do your own research. But that obviously is going to be in the member section because, guys, this is something very critical. This is something that a lot of people are just failing at miserably. And then they turn around, whine, bitch, and moan about, I got had. I got taken for. Well, you really didn't get taken for because you didn't do your damn research. At that point, if you don't do your research and you're putting money into these things, that's not called investing. That's not called trading. That's not called anything other than gambling. And we don't want our subscribers to gamble because the house always wins. You're not going to win when you gamble. So I'm going to step off of this soapbox here. That was my rant for that whole spiel. And we are going to move on. All right, moving on. Exchanges need to get their act together. Now, we saw in the past few weeks that authorities in countries all over the globe have been tightening regulatory oversight on exchanges. Well, 2 more Japanese crypto exchanges are now not going to operate in Japan. And this brings the total number of cryptocurrency exchanges that have closed down in the country to a total of 5. So exactly what the hell is going on in Japan? We spoke about the Japanese Financial Services Agency, FSA, last week and how they were butting heads with Binance. The same regulatory agency ordered Tokyo Gateway and Fukuoka-based Mr. Exchange exchanges to make some significant improvements on their data security back in early March. Both of these exchanges were also ordered by the FSA to make some improvements on particular safeguards that they decided were insufficient. And instead of complying, both of the exchanges withdrew their applications to legally operate as exchanges. Now, unlike Binance, who up and left to Malta, these exchanges will be returning their clients' cash and digital currencies to them. I do have to say one thing here. It's a really good thing these guys aren't running away with the money. At least that shows me that they didn't have any bad intentions or diabolical plans to rob their clients out of their investments. The 2 exchanges join Raimu, BitExpress, and BitStation, who decided they would just stop their operations after this law, which forces crypto exchanges in Japan to register with the FSA. According to Nikkei, which is an Asian review, more exchanges are expected to follow this pattern of shutting down. It's also important to acknowledge that at the moment, there are about 16 exchanges that are already operating in Japan, and they're registered with the FSA. Okay, here's what I think. This could be a good thing in the short term, where the FSA is shutting down exchanges that don't comply with regulatory standards. But in the long run, this could turn into a situation where exchanges pay their way for a regulator to deem them as quote-unquote acceptable exchanges. Or, on the converse of that scenario, regulators closing down exchanges that may be too disruptive to the financial industry. It just creates a centralized point for a centralized point. I know last week I mentioned that I would probably have liked Binance to get registered, but the more I think about this, I realize that we have no idea what the regulatory stipulations are that the FSA is holding these exchanges to. There isn't much transparency from the FSA, and that is where the problem lies in my opinion. I have an issue with having one entity which would hold a monopoly and could hold a monopoly in deciding the fate of an exchange based on their consistently changing definition of what is secure and what is not. Usually, and often without any technical understanding or competency of the technology itself. Now, this just doesn't sit well with me. The FSA is just a group of politicians and bureaucrats, and you and I know that in the long run, history has proven that politicians and bureaucrats tend not to be honest or efficient due to the incentives to keep the system a monopoly. Now, the only way we can combat this is if we have education at the government level. If those that are governing us and trying to make decisions on this technology and their exchanges are to be informed about the blockchain and its security that exists or may not exist, then maybe we'll have a better chance at good legislation. until they have that knowledge about what they are trying to regulate, it's all going to be arbitrary, and it's going to miss the mark for keeping citizens safe in this space. I'm not saying that I don't want any regulations. I want good regulation, and there's a big difference between what is going on and what should be going on. What I would love to see is someone like Andreas Antonopoulos, or someone of that level of understanding, who understands the technology to that degree, consult and make good regulatory measures, or help the governments make good regulatory laws and rules and regulations. But, we need someone who is knowledgeable, who knows what this technology is, not some random bureaucratic groups or politicians who have no idea trying to make regulatory mandates or regulatory laws and stipulations on something they have no idea about. And I go back and reaffirm that they should regulate ICOs and not the exchanges. I mean, look at the way the US is doing. They're trying to get ICOs registered as registered securities. And I think that's where the main meat is going to be. If we can regulate ICOs and find out which ICOs are scammy and which ones are actually legitimate ICOs, initial coin offerings, then we may have something there. But until that happens, regulating exchanges is not going to do anything. As a matter of fact, like I said, in the long run, it will probably cause more problems. We then have to ask ourselves that, can the private sector regulate cryptocurrencies? And honestly, the answer to that is no. There's no way. Haven't we seen what is going on with Google, Facebook, and companies alike who can't even keep fake news out of their platforms? Much less like Facebook, who has been careless to even curb such information or data use or usage and sale, like we've seen or have been hearing in the news recently with Cambridge Analytica. But that's a whole different topic. It's a whole nother topic, so we won't dive into that because I can go on that alone for like the next 3 hours. Some big news coming out of Coinbase this week. They have decided to add support for Ethereum ERC20 crypto tokens. What does that mean in layman's terms? Well, if Coinbase adds support for ERC20 tokens, that means assets that run off of the Ethereum protocol could be supported on GDAX and Coinbase, which means assets that run off of Ethereum could and may be added to the exchange. Now, we don't know what they plan on adding, but I do think this will have some good effect or effects for those of us who are in the market already. I'm very solid on the idea that we shouldn't worry about the market right now. And the reason I can say that with at least as much confidence as I can have in a market is that we see companies who are looking at advancing in the blockchain industry and actually getting down to business and looking at making products and pushing forward while the market is in a slump. If crypto and blockchain were to basically die off, we wouldn't see companies putting this much research and development into this market. The thing that caught my eye when I read the CoinDesk article on this topic, Dan Romero, who is the general manager of Coinbase, basically came out and said that Coinbase wants to add new assets, tokens, and coins, what it may be, to their platform. But the thing that's stopping them at the moment is that the Securities and Exchange Commission, SEC, the SEC, and a bunch of other regulatory bodies aren't being clear right now. And because of this, it's a bit of a risk for Coinbase to add any new tokens or assets. This I can understand. And I understand their hesitation on Coinbase's part. Because as a company, I wouldn't want to open myself up to potential lawsuits or liabilities either. All in all, the article explained that Coinbase plans on waiting to see where the regulations fall. And as soon as there is more regulatory clarity, then they plan on thinking about what moves they want to make, and that would be based on what benefits their business, of course. I would have taken this as a grain of salt, or maybe something in the grapevines, but shortly after March 26th, Coinbase themselves published on their own blog that they were announcing their intentions to support the ERC20 technical standard. If you're new to the crypto realm, the ERC20 protocol is what over 90% of most ICOs are built on. So, if Coinbase builds that support for the ERC20 standard on their platform, they will be able to leverage that for a number of assets that use that ERC20 protocol, provided they aren't securities. That's great for Coinbase. But the real question is, what do I get? Let's be real. Let's get down to it. That's the question we want answered. How does this benefit us? So there are a bunch of products that Coinbase has under its name, of which we have Coinbase itself, Coinbase Custody, GDAX, Coinbase Asset Management, and so on. Now, Coinbase Custody, if you aren't familiar with it, is an institutional level product for large investors that are willing to put up about a minimum of $10 million in the market. This alone requires the investors to put up about a $10,000 setup fee, and they're required to pay 10 basis points per month. So this product is probably not for you and me, but it will open up more assets to large investors that may not be able to trade on GDAX or Coinbase. The big thing to note is that Coinbase Custody will be the first to allow access to these ERC20 tokens. Now, at first glance, I thought, what the hell, guys? But as I took some time and let this sink in, I started thinking, well, big money goes into play, and they have an on-ramp into ERC20 tokens now, which means we could potentially see a huge influx of volume. And at the moment, we lack volume to get these prices back up. For the most part, this could get us higher in the overall crypto market cap. Increasing market cap equals more money for us, especially if we're holding or hodling as they call it. This furthers my conviction that we aren't going to see a $0 Bitcoin anytime soon. The market is just shaking out weak hands and making room for institutional money. We've been talking about how we aren't going to see cryptos take off until we get some institutional money in this marketplace. Guys, this pullback is virtually that process taking shape. A lot of us are quick to freak out, but what you're witnessing is that exact thing happening. This is how institutions get in on the game. They're not stupid. They aren't going to buy in at all-time highs to make you money. They want to buy at all-time lows so that when you buy, they make money. Do you see where I'm going with this? I'm a firm believer in this technology, but the more I read, and the more I read with skepticism, since ideas are worthless if, well, they aren't or don't have a product to back them up, I find out the things we theoretically want to happen are happening. It's just that when you're so focused on the micro perspective of it, it's hard to see the overall macro perspective until you literally take a step back and get a view of the bigger picture. How do I really see the production of these new assets? Well, let's think of it this way. If things get introduced to Coinbase Custody, what that means is they'll eventually trickle down to GDAX, and then possibly to the Coinbase Asset Management, which is the index they have, and then finally to Coinbase, if they choose for that to happen. Now that's the operative thing, if they choose for that to happen. Now they've already expressed that because a coin or an asset or something is on GDAX, that doesn't mean it will show up on Coinbase. If institutional and Coinbase investors are first able to access this, how is this going to affect you and I? And how is it going to affect market value with these coins? This is the question I'm focused on. Most people talk about what the next coin is going to be that's going to be added to Coinbase. Oh no, Ripple's going to be added to Coinbase. Let's go get some Ripple. Or Bcash or Bitcoin Cash is going to be added to Coinbase. And then everyone jumped on it. But I'm more focused on what's the next coin on Coinbase Custody because of its effects. Now, we saw if it does go through the trickle-down effects, the one thing I'm convinced of is that this could be the catalyst we need to get another altcoin run. And not only that, it gives us quite a bit of a head start than those who are speculating what's going to be on Coinbase. If we just look at what's on Coinbase Custody and then see how that's going to trickle down into our marketplace. Some good news here. Ripple, in conjunction with DonorsChoose.org, announced that they would be fulfilling all current requests to the school funding charity site. This means that thousands of school projects and classroom funding requests would be fully provided for through a sale of donated XRP tokens. The donation comes as somewhat of a surprise. Not is it surprising to the general public, but also to Charles Best, the CEO of DonorsChoose.org. Best sent a pitch to the Ripple team asking for donations, but he never expected the level that DonorsChoose.org would receive. In total, it received 29 million US dollars worth of XRP, which was donated to the charity, enough to fully fund projects in every state. The announcement was made on Stephen Colbert's late night show, himself a major donor to the schools in the past. Donors Choose is a crowdfunding website designed to provide classrooms with supplies that they may need. The United States suffers from a school funding crisis, and teachers often make up for the shortfalls out of their own pockets. So, the website allows teachers to post projects and funding requests in a manner similar to Kickstarter, allowing generous users to donate to the cause of their choice. These projects vary from new technologies that can help kids learn the most in-demand skills, or they can be as simple as proper nutrition that can't be provided by the school itself. Charles Best, a former history teacher, created the site back in 2000 to solve a problem that he witnessed firsthand. And since then, it consistently rates as one of the best charities. The site reached 1 million funded projects in early 2018, even before Ripple's massive donation. Now, 3/4 of all public schools in the United States have posted a project on this site for funding. So, how does this affect us? And how does it help the cryptocurrency industry? Well, the crypto industry as a whole still suffers from public perception problem. For many years, Bitcoin was known as the digital currency used to purchase illicit substances on the dark web. Although the industry made great strides towards public adoption, there is still this lingering sense of unease. After all, altcoins are still the currency of choice for dark web transactions. So it doesn't help that the barrier for entry is so high. Ripple's widespread acceptance among financial institutions make them an ideal candidate for public relations, although the average person still can't identify what Ripple does. And the fact that they have a usable product puts them leagues ahead of most other altcoins. So a multi-million-dollar donation cements their positive image. And you know what? In turn, that helps the image of cryptocurrencies as a whole. The fact that cryptocurrency just funded tens of thousands of public school projects is a massive, massive triumph for public relations. In other more disturbing news, the Cloud Act, which is the Clarifying Lawful Overseas Use of Data Act, was introduced by Republican Senator Orrin Hatch. With the support of both Republican and Democratic senators, it allows law enforcement agencies to, or an easier route, to access user electronic data such as emails, messages, and files, even if it's stored on servers in another country. The Act also creates a framework for U.S. lawmakers to send information from U.S.-based servers to other countries on a case-by-case basis. Now, this is a little concerning, and actually, not a little, it's very concerning. Some, including influential speakers, such as the author of Mastering Bitcoin, Andreas Antonopoulos, have criticized how the Act was passed without debate and the Act's implication for privacy. Now, he went ahead and tweeted earlier this month on March 23rd, quote, "The Cloud Act passed. It destroys privacy globally, so it had to be snuck into the $1.3 trillion omnibus without debate. Encrypt, encrypt, encrypt. Go dark. When privacy is criminalized, only criminals have privacy. We got sold out again." End quote. The digital rights group, the Electronic Frontier Foundation, EFF, believe that the Act bypasses the Fourth Amendment, which demands that there has to be probable cause, translating as a high level of suspicion that is required for any investigation. The EFF also argues that the Act could result in the U.S. giving individuals data to law enforcement agencies in countries that are known for abusing the rights of their citizens in human rights abuses. The American Civil Liberties Union, or the ACLU, also stated that, quote, "threatens human rights, jeopardizes the Fourth Amendment interests of individuals inside the U.S., and provides an alarming level of discretion to the executive branch at the expense of congressional authority. Technology companies storing data will have the opportunity to refuse to share user data if they feel requests are not part of a legitimate criminal investigation. Instead, asking for the current legal solution process, a Mutual Legal Assistance Treaty, MLAT, to be followed." Here's the disturbing part. The companies that supported this act were Microsoft, Apple, Facebook, Google, and Yahoo. Does it really surprise us that the big guys were behind this or support this? Well, what has most of the crypto community concerned is that with incidences like the whistleblower Edward Snowden had revealed that the US government had been tracking, or actually the NSA had been tracking the activities of Bitcoin users, this act gives the government more power to invade and monitor the online privacy. And it only goes to show how critical and important it is to keep yourself behind a VPN, or a virtual private network. Now, I know the one that I use, and I'm not getting paid to say this, is Pure VPN, as well as TorGuard. And those are the two that I personally use, but there are a plethora of them out there. And honestly, guys, if you worry about your privacy, I would not hesitate to get one of these. Well, you know what that sound means. It's that time again, guys. If you want to learn more about smart crypto investing, then become a member over at CryptoCoinGuru.net. Make sure you hit the subscribe button and that tiny bell next to it so you get our weekly podcast notifications. Don't forget to follow us on our Facebook page, as well as on Twitter @_CryptoCoinGuru. Till next time, episode 13 is in the can. This is Singh signing out for Crypto Coin Guru. Later, guys.